My next guest is a co-founding partner at Floodgate, a venture capital firm that was an early investor in Twitter. And Miura-Ko focuses on early stage investments. And welcome to Bloomberg West.
Thank you for having me.
So, the forgotten founder of Twitter, Mark Zuckerberg, getting sued by multiple people claiming they own part of the company. Why are founding stories so controversial?
I think just founding a company can be actually very, very complicated. And the process through which the ideation happens and the company is actually born and developed is very, very complex. And so who gets credit for it, who doesn't, in the eyes of the public versus the eyes of the engineers and the founding team, it can be actually quite complex. Now, I think the stories behind Twitter and Facebook are very different in that just the lawsuits going on with Facebook are people who are coming out of the woodwork who weren't really there to help with the execution. Whereas in Twitter's story, there's some controversy around what people got credit for. And I think those are two very different aspects to that kind of complexity.
There has been quite a bit of drama at Twitter, CEOs coming in and out, Evan leaving, Jack coming back. I mean, how do you avoid that kind of drama, essentially?
I think that just in the growth phases of a company, you go through many different phases, right? You start with learning and discovery and trying to figure out who you are as a company. And once you hit that stage, you actually start to have to scale the company, which is a completely different development process for a company. And in that process, you're going to see lots of characters come in and out of that company, and it's not unusual at all.
And you work at the very earliest stages, right?
Yes.
Like two people.
Yes.
So at the very earliest stages, what do you do to validate ownership, essentially? I mean, do you sign agreements? Do you make sure you know who should get credit, or is it,
So there's difference between credit and ownership, right? And so there are ways in which we determine what ownership the founders will have. And oftentimes, from our perspective, the founders have already distributed the shares amongst them and give it credit to one another and have some sort of agreement when we come in and we offer to buy a percentage of that company. And so for the most part, that's actually been worked out. The parts where it becomes sort of questionable is if all the founders say they get equal weight, as an example. That tends to be a red flag that suggests that they haven't answered the really hard question of who really gets the most credit. And so we have a system of some of these red flags where we try to think through, have they really answered some of these hard questions? But a lot of times it's really hard to pick up on some of the subtle character differences that we might find at the end of the day once the company has been successful.
So what kind of things do you do to verify roles? I mean, are they signing agreements or signing contracts that early on?
With one another, sometimes they do, but oftentimes it's just within what we call this capitalization table, and it explicitly tells us who has ownership of what portion of that company.
Now, I want to talk to you a little bit more about this early stage investing. Are you seeing rising valuations for hot, big companies like Facebook and Twitter? Is that trickling down to the seed stage for you?
I think some of it is. I think there's a lot of excitement around social commerce and the social element of businesses, and especially within the consumer sector, there's a lot of excitement. But I think we as early stage investors also recognize that it's a very long road to get to the Twitter or the Facebook stage. I mean, these companies have been around for several years. And so those valuations don't affect as much our investment circles as, a company that is much, much later stage in its development.
And in terms of top talent, I mean, Eric Schmidt himself has said it's a war for talent in Silicon Valley. What kind of dynamics are you seeing in terms of people moving from big companies to startups, wanting to have the best opportunity? What do these engineers and designers, what do they want?
I think that is actually the defining trend that I'm seeing at the very early stage. And the problem that we're seeing is that most engineers, as an example, aren't making the trade-off between taking some risk and maybe taking a pay cut, but then getting some equity. So we're finding that a lot of engineers are not actually taking a pay cut, but also getting equity within these startup companies. And so what a lot of founders oftentimes underestimate these days is the cost of engineering talent. And so even though we hear about lean startups and startups becoming much more economical to fund, we're also finding that at the same time, talent has actually become much more expensive. And so the cost of building up that startup and developing a real company is also still rising as a result of that.
Talent a lot more expensive and harder to find. And Miura-Ko of Floodgate, thanks so much for joining us. We'll have to get into the social commerce and the most exciting sectors for you next time. Thanks so much.